Good morning. Welcome to the FundForum Middle East. My name is Peter Duke from Fidelity Worldwide Investment, and I'm delighted to be joined today by MR Raghu, Head of Research at Markaz. Raghu, welcome.
Thank you.
Your specialist subject today is oil.
Mm-hmm.
So I suppose if we kick off just with a basic question around demand and supply, how do you see those dynamics in the oil markets at the moment?
Sure. At a very broad level, any commodity is always impacted by demand and supply. Price is always a function of demand and supply. And this worked very well for the oil as well. In the past, when we have a demand slackening, the supply gets adjusted and therefore the price is defended. Now that model has broken down, and we have sort of a double whammy now, if I may call it. So we have a weak demand and we have an oversupply, So this is killing the price, obviously. Now the question to ask is, why is supply not getting adjusted to a weak demand to defend the price? Okay, that's where I feel politics, comes into play, and that's why I said there is a shift in the way we have to think about oil market in the current context of the simple demand supply price equation, actually.
So if you take that argument about politics, and obviously the role of Saudi Arabia is key here, how do you see that and how do you judge their policy? Is it actually working, do you think, to try and stabilise oil?
Yeah, it was very surprising the way way I understand how Saudis acted this time around, because traditionally OPEC, which is quote unquote Saudi Arabia, always had this defend price strategy in place, but they've observed that unconventional oil has come to the market in a big way, and the traditional price driven response may actually backfire on them after some time. So they have decided to play the gamble, and the gamble is don't defend the price, but defend your market share, and which means keep producing, rather produce more, to get more market share. And they know the consequence. The consequence will be a lower price, and we all see that today. But the thing is, there is an inflection point to this gamble. They want to play this till they get the high cost producers out of the scene, and then go back and play the original equation of defending the price. Now the thing is, who is going to blink first? That's the question now. So the way we understand unconventional producers, it's a very hazy picture, because there is a technology angle to it, there is a price angle to it, and the player profile is different. The conventional oil is controlled by national oil companies, for example, backed by huge sovereigns. Unconventional oil is controlled by small players who are mostly in the junk bond markets. So it's a completely different dynamic. So we don't know. The jury is still not out, and we hope the Saudi gamble pays off, and the oil market comes back to at least $70–80 as they want it to be in the medium term. But right now we are in the scene, so we don't know the climax.
So we don't know the answer. But have you been surprised by the resilience of shale producers in the US?
Absolutely. Absolutely. Not only the resilience, but the continuous downward estimate of the cost of production. Because I remember Goldman Sachs were predicting a cost of about $80 to start with about 2 years back, but today they're talking about 60, and they're talking also estimating it to go down. So as the cost of production goes down, then both sides may not blink for a long time. Okay, so that is a big event to watch, actually. So it's not happening that you defend your market share and people just go out of the system. They're just not going out of the system, actually.
And we have new people coming into the system, specifically in this region, Iran. What's your view on?
Absolutely. So that's what I said. Iran is a it's not, I mean, a big thing as people make it out to be. But definitely in about 3-4 years they will even contribute to the oversupply situation. But not only Iran, you know, we have to talk about Iraq, we have to talk about Libya. I mean, all hot spots where we thought supply could be constrained are never constrained. You know, so they are actually adding to the glut of the supply. And then, as I said, the demand side is getting bad, and therefore we have a double whammy effect of actually on the price.
If we see these oil prices at these levels, maybe increasing in the medium term, what's the impact in terms of the GCC economies? You know, what do you see where some of the stresses may come out?
I feel that the impact is more negative for MENA economies rather than GCC economies. Why? Because GCC economies are sitting on huge reserves, and they have the firepower actually to withstand this low oil price environment for a considerable period of time. Actually, all this, you know, tension about Saudi's reserves dwindling very fast, and I mean, I think it's overblown in my view. Saudis definitely have amassed huge reserves that can stand them today, you know, in good stead compared to what they were in 1998, for example, when oil prices were very, very low. But it will hurt MENA economies much more than GCC economies, obviously, because the break-even oil price for MENA economies are much higher compared to GCC economies. For example, Iran requires an oil price of $175. Saudis require an oil price of 100. Kuwait requires an oil price of 50. So the comfort zone is definitely much better in the GCC compared to the MENA economies actually. So it's the MENA economies that will start putting pressure, you know, to the extent they are in the OPEC cartel, you know, to really stop this defending market share game and at least give us some price that we can breathe, you know. So
interesting. And one final question, I'm going to put you on the spot. In terms of oil prices at the end of this year, what do you think is a reasonable number?
We are already, I mean, that's an easy question to answer because we are already close to the end of the year. So I'm fine to take a call on that. You know, oil prices are now range bound, you know, between a band of 40 to 60, and I think that's going to be there for some time. The $100 oil price era is simply gone, but we are not definitely into the $20 oil scare as well. So 40 to 60 is the world comfort price, but whether that's a comfort price for GCC, I don't know.
Okay. Raghu, thank you very much for your insights. You heard it here first at FundForum Middle East. Thank you.
Thank you. It's a pleasure talking to you. Thanks.